All right, ladies and gentlemen, we are back. Happy New Year. Hopefully, everyone is having a wonderful new year as we are now 14 days in to the new year. And the markets have been trying to decide what it wants to do. We had two big reports that came out. One was the CPI and then the PPI. And then we got the jobless claims. And basically, the markets have now decided that it's possible that they have exhausted themselves and that they're ready to pull back. Take a look at the Bitcoin futures here. We have a crash alert on Friday's close. And this crash alert is good for Sunday night into Monday's trading. Now, keep in mind that the rally and crash alerts do at times precede the market 3 to 5 days out. So this is going to be very interesting to see how the futures shape up when the markets open this evening. Next, we have Zcash or ZEC. And as you can see, this market continued to fall, hitting fresh 52-week lows. And then we got the rally alert here, and the market gave some initial upside production. Bottom of the Kumo cloud here is where the market is trying to get back to. All right, so that's around the $27 to $28 handle. We'll see how much energy the market can build up with this bullish trend momentum reading. Keep in mind, this is a bear market, obviously, and the market is trying to stage a bear market rally or some type of a technical bounce. Technically speaking, it's a technical bounce until it gets above the Kumo cloud. As long as it stays below the Kumo cloud, it's just a technical bounce, but it's considered a bear market rally once it gets above the Kumo cloud and starts boogieing. So you're still just technical bounce for at this point. Taking a look now at XRP Ripple, and you can see here, this one also has a bullish trend momentum reading. The market is still in a bullish configuration though. Believe it or not, you're in a flat market, but it's a bull market nonetheless. It's just the price action is just stagnant. It's flat. It just can't get any real energy behind it, and it's really struggling. So we'll see if it finally decides to go. But remember, this parabolic bar was way back here in July of 2023, and the market has not been able to challenge and or take that out. And look how much time it's been. So I think once this market gets going though, I think the initial output should be enough to get it up to about $2 or $3. So we'll see what happens once this thing gets going. Next up is silver. So we now have a rally alert given to us on Friday's close. So we have a rally alert now for Sunday night into Monday's trading. And the market's going to attempt what it did back here. We had that nice rally that went all the way up and got you over $26, which is quite spectacular. So this rally alert here that we have now is appearing around the same condition as this one. The market had got just at the top of the Kumo cloud, same thing here. And it gave us a rally alert, and we had a pretty decent upside production here. So this is now the second attempt to do so. So we could see another ramp up like we did here, when you go from that $23 to $26 mark. So this will put the market back at a test of the old December high. Can the market do it? Of course it can. You're in a bull market. So basically what this system is telling you is that the market is the trend is reclaiming the price action, or should we say attempting to do so. Once it gets back above the Kumo cloud, it'll be evident to everyone. But for now, we'll just have to watch and see. But it looks like the trend is trying to reclaim the price action. All right, so next we got the Dow. The Dow futures has just been struggling and going absolutely nowhere. You can see it's just been consolidating up here with a bearish algo shift alert the whole time, with a bearish trend momentum reading to boot, but we haven't gotten any downside production. So market's basically double topping here. Can't rally and can't fall. Can't rise and can't fall. Just totally flat at this day and time. So something has to give, right? Either the market's going to break to the downside or it's going to give one more attempt at a rally and try to take out new highs. We just came fresh off of 52-week highs. So this is going to be interesting to see how this market is setting itself up for Sunday night into Monday. You're in a bull market, yes, but you do have a bearish trend momentum reading. So technically speaking, we are in the sell the rally mode for the Dow to start things off Sunday night. Next, we have the NASDAQ 100, similar type of a situation. Bearish trend momentum reading, sell the rally mode. Except for this one has a bullish algo shift, right? Where the trend, long-term trend, is trying to reclaim the price action. However, the market can't rally. Why? Because you're in the sell the rally mode. So all the rallies are being met with resistance. All right. So it's making it difficult. So I think the market will have no place to go but to fall down, because as long as you have a bearish trend momentum reading, you cannot rally. All right. You cannot rally with a bearish trend momentum reading. Either you're going to, move lower. You can consolidate and move sideways, but evidently, eventually, you're going to continue to grind lower. Either that's going to happen, or we try to break out from here and the market tries to hit a new 52-week high. Just keep in mind that the market is coming off of fresh 52-week highs here. Okay. So is the bull market exhausted at this point? It's looking like that could surely well may be. So for the NASDAQ, it's interesting because of the crash alert, the initial downside production, followed by a bearish algo shift to a bullish algo shift. So that is very interesting to see that happening here. Looking at gold, yeah, it's still in a bull market, but it's under a bearish trend momentum reading as well, and the market has been in the sell the rally mode. That's why it hasn't been able to rally, and you've been getting back to back bot check alerts, crash alerts, a lot of negative alerts, and now we have to look forward to the market moving lower, because as long as you have a bearish trend momentum reading, the market can't rally under a bearish trend momentum reading. This is not a rally. This is a technical bounce in a sideways bearish market, because notice how you got the crash alert here, and then what happened? The market breaks. So that's what we got going on here. All right. A lot of bearish alerts going off, folks, in a lot of these markets. Next is the S&P 500. All right. You have a similar thing going on here. All right. Very similar. Okay. This is a bearish trend momentum reading, sell the rally mode, except for on the S&P, you also have a bearish algo shift alert in the market as well. All right. As long as you have a bearish trend momentum reading, the market can't rally. So we're looking for these markets to start to break down. Next, we have crude oil. Now, crude oil has been doing everything in its power to try to get a technical bounce and turn it into a bear market rally, but it's just been unable to do so. Every technical bounce it becomes nothing more than a technical bounce. Then it gets sold right back off again. And then it tries to take off yet again and hits more resistance. But as long as you have a bullish trend momentum reading, the market can't fall. So I'm anticipating that we're going to try to keep hammering away at the resistance. Resistance is at 75. I told you back when we were back down here, and that's exactly where the market stopped short at. 75 on an intraday basis, spikes to 75, and that's what it did, and then pulls back. So the bottom of the Kumo cloud is doing as it's supposed to, and that is act as a cap for prices, and then also act as a resistance, as a wall to push prices back down. So ultimately, I think the market's going to come back down. This is going to turn red again. I think we're going to start to see the bear trend reclaim the price action, like it attempted to back here with the bearish algo shifts. Remember back here had the bearish algo shifts. So even though it's taken off now you're hitting resistance. So I think we're going to either see an outright crash alert or bearish algo shift alerting that the crash alert could be coming forthwith. So just something to watch for on tonight's reports. Oh, and by the way, if I failed to mention it at the beginning of the video, all of the reports are out. All of Sunday night's reports are out, and they are on your dashboard. If you go to postwavetrading.com, log into your dashboard, you will see the reports there. All the reports have been uploaded. Okay, looking at the euro gave us a negative bot check on Friday's close. And we still have this very long bearish trend momentum reading. Remember what I said, the markets can't rally under a bearish trend momentum reading. You can get a technical bounce that looks significant enough to be said, oh, that's a rally. But in a bear market rallies can be powerful. This was a technical bounce that became a bear market rally. Remember, bear market rallies happen north of the Kumo cloud. Technical bounces take place below the cloud. And that's what you had here. The technical bounce became persistent enough to become an actual bear market rally. And it looks like the rally is all but over. It's starting to lose steam, that's for sure. So for this one, this time it could be over. The last time we had a situation like this, we had the bullish algo shift behind it, so that we know that that was going to be an ebb and flow that went north, that favored north. Now we have a bearish algo shift. All right, so it's looking like the bull market top could actually be in and solidified at this time with this failed attempt to take out this high here. All right, market failed. That's a failed rally. That's a double top, and we got a negative bot check. So we know a big down arm is coming, or leg, in this market, and it is inevitable. All right, so on your euro, if you're long, you're wrong. Pound sterling, same thing. We got a negative bot check here 3 trading sessions ago, and same thing, top and then failed top. The market tried to come up here and test this, but failed. Bearish trend momentum reading, and there's nothing you can do about it. And you have bearish algo shifts on top of that that signify a top in the pattern. All right, so it's looking like these markets could roll over, and we know a big down leg is coming. All right, it's imminent. You had the last bot check back here, negative bot check, market ignored it. Now you're getting a second warning right after you got this crash alert. So big down leg coming in these currencies. All right, so the next up we got the Aussie. Now the Aussie was the only one that was really bucking the trend. You started with this nice technical bounce, then it turned into a nice little rally. But because it's a bull market here, at first it was a bear market right here, but it transitioned itself, and it did so rather nicely. This bear market technical bounce turned into a unofficial bull market, or this is what you call the beginning stages of a bull market. It's not officially bull yet, but it's trying to become that. A lot of times, all transition, and when they initially do it, like the market did back here, it failed to transition to bull market. to beginning stage of a bull market. Then here it failed again, all right, utterly here. So is the third time the charm? That's the question. All right, but then here's something that didn't happen back here with these two failed attempts. See this green line right here? The Aussie literally crossed over into the bull market territory on Friday's close. So this beginning stages of the bull market materialized. What this means is you're looking at the bottom of the bull market. All right, the beginning stages of the bull market right here. Now you're official, and you have back-to-back positive bot checks. So we know a big upsurge in the Aussie potentially could be coming imminently. All right, so very interesting developments. Now the Russell has been the weakest of the stock indices. We got the bearish trend momentum reading, so you're in a sell the rally mode. And what happened was this was followed by a bot check after a crash alert, and the market just gave it all up. Now you have bullish algo shifts, all right, that are signaling the potential that this could be a bottom, short-term bottom, and that the bull market is ready or getting ready to reclaim the price action. If so, where might we go? Resistance is back up here. All right, resistance is back up here. All right, and that's going to put you back just shy of 2,000. All right, so this is something to think about. You know what I mean? As we're going forward. But you're still in a correction. You still got the crash alert. The bearish trend momentum reading. So you can't rally with a bearish trend momentum reading. You can get a technical bounce, but you're not going to get a rally to new highs. Not under a bearish trend momentum reading. This momentum reading has to go green, has to turn bullish before that can really happen. So we have these 52-week highs, and then the market's been retreating ever since. So we'll see. U.S. dollar index, the really big question mark, right? So it is officially into a bear market. The bull market for the dollar is over. All right, you crossed over into bull here, and nothing could get really going from it. Then you crossed over officially to a bear market. We're now officially in a bear market, but this bullish trend momentum reading still persists. So it's keeping that limit, the downside limit. So this super support at 99.55 has been really holding up thus far. But now that you're officially in a bear market, this support is under threat. All right, it is under threat. Now you have a bullish algo shift here. So perhaps this can help drive the prices, right? All this back here was bearish algo shift. And you had this positive bot check, and then you got a little micro upsurge, but nothing really. So the question is, can the dollar break above the 105 resistance, the 104 to 105 resistance? Can it get back into that zone? Or is it going to continue to display weakness? Well, the fact that you're officially into a bear market now means we have to anticipate, all right, and it's expected that when you're in a bear market, you expect lower prices. Likewise, in a bull market, you expect higher prices. So we are expecting that when the technical bouncing around is over with, this is going to turn red and the price action is going to head lower. So we expect that to happen. But we expect none of it until the 99.55 support is taken out. As long as the price action does not take out that major support zone, then expect for the US dollar index to be flat to bullish, because the bullish trend momentum reading is here. So as long as this bullish trend momentum reading persists, this market can rally. It rallied off this low before. You could say this right here, is basically a double bottom because the market failed to take this out. So we expect prices to head higher. So I would say expect lower prices, But because of the bullish trend momentum reading, I'm saying expect sideways to higher prices in the near term for the US dollar index. So all those claiming the dollar's dead, the dollar's over, if you're is wrong. If you're short the dollar, you're in pain, and you're gonna be experiencing more pain as this continues to power up. All right, so you got a bullish trend momentum reading. In a bear market, if there's a bullish trend momentum reading, you should be long the market, not short. You got to wait for your sell signal to get short again. You have to wait for this technical bounce and or bear market rally to exhaust itself, which it has not done. All right. You had the bearishness back here. All right. And the market crumbled under it. Okay. The market was price action was free to flow until we got the negative, the bearish algo shifts. Okay. Once the bearish algo shift warning alerts came, that's what it was. And you had to start paying attention. And what did we see happen? Well, the price action gave way. Likewise, back here, it kept saying, nope, you're not done yet. Market continued to head lower. Now the bearish algo shift is over. Excuse me, it's done with. The market has finished. Now, what is it doing? It's immediately heading higher. That's how the markets roll. All right. So always remember that. If you ever in doubt about how the market is rolling, that's what you look for. You look for and look at the bearish algo shifts, because the bearish algo shifts and bullish algo shifts are going to tell you pretty much everything you need to know at that point. So you don't have to really second guess anything. All right. And Ethereum, new 52-week highs in Ethereum futures. I'm not surprised. You had a bullish trend momentum reading with a rally alert behind it. Of course, the market was going to continue to trade higher. All right. This market's wide open. Bullish trend momentum reading, bull market. That's called a locked-in bull market. When you have a green line, is bullish trend momentum reading. That's this green line here. In a bull market, that's a locked-in bull market. There's nothing bearish on this chart. You don't have a bearish algo shift alert, nor do you have a crash alert of any kind. All right, so what do we anticipate? Nothing. As far as a bearish perspective, there is none. Not in the chart anyway. There is nothing to signify or warn you of anything bearish in this market at this time. All right, so just FYI, this thing is wide open. All right, folks, so that's what it is. That's how the first full trading week of the new year has started out. We'll see how it finishes, because that's going to be important as well. And I'll see you guys back here tomorrow. You know, the system works. If you work the system, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back. Smash that like button, share, and subscribe. And I'm out.